Has the roar of the bull market lulled us into a false sense of economic security? Perhaps it's time to take a closer look at the fine print of our economic narrative. In recent years, we've witnessed a peculiar phenomenon, the inversion of the yield curve. A typically reliable harbinger of economic downturns, the yield curve has been flipping its traditional order with short-term interest rates surpassing long-term ones. But recently, a bull steepener has begun to emerge, with the 2-year Treasury yield falling faster than the 10-year yield. This uninversion often acts as the calm before the storm, belying claims that this time is different. Yet the yield curve's gymnastics is not the only cause for concern. A more insidious problem lurks beneath the surface: government spending and debt. The real issue is not the bond market's reaction, but the economic distortions and lower growth caused by government misallocation of resources. Consider recent events. The Bank of Canada has cut rates for the second consecutive month. US new home sales have unexpectedly declined. Deutsche Bank is in the throes of financial troubles, particularly related to commercial real estate losses. These events don't paint a picture of an economy in robust health. Some argue that we're in the middle innings of a banking crisis that began in 2023, despite reassurances that the problems have been fixed. It seems the yield curve's behavior is more an indicator of underlying economic risks, rather than just a result of Treasury issuance patterns. Banks are showing a preference for buying risk-free assets like Treasuries instead of lending to the real economy, indicating heightened risk perception. The 2-year Treasury yield falling 10 to 20 basis points below the 10-year yield and staying there would signal a paradigm shift in the investment strategy. In conclusion, current economic indicators, particularly the yield curve, suggest ongoing economic troubles and a potential continuation of the banking crisis. This narrative contradicts the more optimistic mainstream narratives and invites us to question the true state of our economy. So as we navigate these uncertain economic waters, it's crucial to remember that the loudest voices are not always the most accurate. Sometimes it's the quiet whispers of the yield curve that tell the truest tales.